Check, check. 1, 2, 1, 2. Hey, what's up, everybody? RPM with you here. Trader Spotlight Live, DayTraderRadio.com, of course. Getting with you a little early tonight. It is June 4th. It's a Monday, of course. And we're doing the Trader Spotlights on Monday now, but this is a earlier time. And so we're seeing you at 7 o'clock. If you're watching this live, it's 7 o'clock Eastern, June 4th, Monday. If you're watching this on a YouTube presentation, we appreciate you watching the archives. And there's FT71, I see in the chat room there. And tonight's guest, the famous NCDave fib doctor. You guys that have been Day Trading Radio members for a while will remember NCDave. He still hangs out on the site with us, of course, but back in the olden days, he's been around for a long time here. But we're going to have him on. I got his screen set up here in just a second. I want to mention to everybody that if you have any questions for Dave, you can fire those to me in the chat room. Just put the RPM in the chat room so I can see your my little icon there, and it'll draw attention to that question for Dave. Or you can send me a private message, and I'll relay those over to NCDave. So with that, I guess I'll go ahead and turn on. Dave, you want to go ahead and unmute your microphone and say hello to everybody?
Hey, everybody. How's everybody doing? What's up, FT?
We got FT71 in the room there. That's going to be might all we have. It's a weird time for us, Dave. There it is.
Yeah, y'all usually start about 9 o'clock, don't you?
Yeah, but you get your diaper change and you go to bed at 9, right?
Well, see, you know, I got, you know, me and my TV programs and stuff, you know.
You know, there's something called DVR.
Yeah, there's DV and FT and hey guys, yeah. I see most of these guys every morning in the futures room.
Yeah, absolutely.
Yeah, I go in the futures room in the morning and I post, you know, a couple charts and just whatever's current. You know, there's Helio. Yeah, I recognize all these guys. So how you been, Paul?
I'm doing all right. I'm hanging in there.
I hear you.
And we've been working hard, and
hey, Dart.
We're me and the wife are doing some camping and stuff. Bought a trailer, and you know, trying to spend some time with the family and all, and we're just real busy. I can tell you that. You know, it's easy for a day to be done before you know it. You know, that's the thing about doing this. And the markets have been crazy, haven't they?
Yeah, they have, and they're going to get crazier. Hey, Rock, what's happening, buddy? Yeah, they're going to get crazier. This thing in Europe is about to drive me crazy. and I'll tell you why, Paul, is just when we thought Europe had something worked out and the market was going to calm down, then they have the new elections. Berlusconi's out. There's new guys in. It's got so complicated, I can't even keep up with it now. But what it's doing to the market is it's like a black cloud hanging over the market constantly. And you never know when that cloud is just going to bust wide open. Hey, Steve. So that's been a big drag on the market is the European situation. Now London was closed today because of the Queen's, I believe they call it the Diamond Jubilee, Diamond Anniversary, 60 years. She's been in power or something. So had London been open today, I think you might would have seen the market down probably substantially. But I see it closed pretty much flat today, I think. Yeah, it pretty much was flat. So, yeah, the market's been weird here lately. It sure has. And it's going to get weirder that's a word.
So, I mean, do you think we're at a level here? And I know we're going to get in, a lot of this you really don't care too much about because you're trading, relatively short term. But do you feel that we're at a point now where we might get some sideways, consolidation for a while because we're still trying to decide is the market, a lot of people are trying to decide is the market fair valued at this point? Do we need to go up from here? Is it undervalued? Do we still have the potential news hanging over our heads? I mean, are we at like a balance point? Are we coming to one of those points right now? I mean, we just had a pretty heavy sell-off on Friday,
Well, Paul, we're technically, and FT can probably correct me if I'm wrong here, but technically, I think we are now in a technical correction. In other words, we are, or we have pulled back 10% in the Dow and the S&P, and I think the NASDAQ. So 10% is what people call, quote, a market correction. So I think we're in correction mode, but, and let me just run through some charts here, and I can kind of explain this a little better. This is a 1 year chart of the ES, and these are daily candles.
Yep.
This had an upside target of 1458, and it just got changed 2 days ago because it pulled back as far. So we've lost, you can see here the upside momentum, that's rolled over. So we're definitely in a correction. This is an intraday 15-minute. Now, here's the same 1 year chart, daily chart. It's just zoomed in tighter with a smaller fib. And you can see last night we had a target of 1263. That was hit around 7 o'clock, I believe. So the market is being very technical. It's not just randomly bouncing all over the place. But
well, that's a good thing.
Everything to me, Paul, is pointing to the downside. Now here's one real important thing. This is a 1 year daily chart of the mini Russell. That's what I trade now.
Oh, you're trading a Russell, okay.
The ES, honestly, to me, and no offense to anybody who trades it, but I think it's just a piece of crap now because it is so manipulated by the high-frequency trade machines that I just don't have the patience to fool with it anymore. And I'll get to that in a minute. But what you got right here, and I'm going to zoom this chart all the way in, okay? This big fib started back in November of last year and goes to February, okay? It had support at 738.2. That's your first support. Next support, 720.1. So if we break 720.1, this upside or long-term, well, you can see it's already hit the target at 851 to the tick and pulling back. I'm just seeing constantly more downside momentum. If we get down here, this is going to reverse from an uptrend to a downtrend. And I'm seeing that in the ES, I'm seeing it in the TF, where I've not been seeing it that much. So now let's go to silver, which is gotten crazy. And you can look right here, you're looking at over $1 move almost every day. Silver is still holding the 26-27 level, which goes back all the way over here to September of last year. And at 26 and change, they came in big time and bought silver. Well, now everybody's hanging their hat on QE3. And in my opinion, Paul, you just can't have but so many QEs. You can't be bailed out but so many times. I just don't see, I don't see any good thing coming from this market other than the Fed is going to keep it propped up as long as they can, and I think you're about to run out of bullets. There's the NASDAQ. Now, this is kind of the tail right here. This is a 2-year weekly chart of gold. I'm sorry, gold. 2 years weekly chart. Upside target $2,068. This started back in January and was drawn up to, now I'm talking about January 2011, not 2012, up through September 2011. Look right here. Let me get my little tool. Look right here how this thing is respecting the 61.8. And these are weekly candles. These are not dailies. These candles are weekly candles.
Right, it's a big deal.
It's a pretty big deal. They keep stepping in every week. Now, last Friday, this thing got a major shove, a big time shove. And what caused that, if y'all will remember, non-farm payroll missed by 54%, or missed consensus by 54%. Well, immediately, everybody said, okay, that's all we need to get QE3, and gold and silver skyrocketed, because every time you have a Fed intervention with quantitative easing, in my opinion, you're devaluing the dollar.
Yeah.
And that's what makes gold and silver pop.
People go to metals.
Yeah. This is cattle. Don't ask me. I call it cows. I have one of my members trades live cattle, so that's why we keep that. Yeah. Now, here's another tale. This is the dollar, 6-month daily. Look what the dollar was doing. Boy, it was on the march. It was on the march. And like everything, you know, like I always say about the ocean, it ebbs and flows. Well, the dollar, between 80 and 83, that dollar loves at 80 and 83 level. Now, I know that's a big spread, but now we're starting, you know, we're starting to get that pullback in the dollar now. So the whole point of all this, Paul, is the market, to me, appears to be confused, scared, and just hanging on to hope of quantitative easing. Well, quantitative easing cannot go on forever.
Yeah, if the QE1 and QE2 didn't, I mean, QE1 was supposed to work. QE2 was supposed to work. I mean, they can't, you're right, they can't keep going, right?
So what's it going to be? QE 6, 7, 8? I mean, you got to somewhere, sooner or later. Well, let me back up a little bit. I had a very, very smart man years ago try to teach me a little bit about gold and how gold trades and how it's valued and what makes it do this and that. And he told me something that made the most sense in the world. I didn't understand it at the time, but now I do. He said, all debt has to be repaid sooner or later by either the borrower or the lender. And I didn't quite get it at the time because I was still kind of new to this game. It's been so many years ago. And now it makes perfect sense. If a bank loans you money for a mortgage and you default on it, then the bank is left having to cover that loan. So that debt has to be covered either by me paying the mortgage back or by the bank writing it off the books. Well, I don't have to tell y'all how much debt this country's in. I mean, I think we're to the point that you can't even hardly, I mean, the numbers don't even make sense anymore. They're so astronomical. So in general or overall, Paul, I just think that we're still in for some pretty rough times. That's my overall general opinion of the market, that it's very, very unstable, and it wouldn't take anything for it to crack.
How far though do we need to go down before we get to that point to where even bad news causes the market to go up again?
That's a very good question.
Because there is a point where people say, okay, I don't care what the bad news is. This is a good price. Like we had back a few years ago when we plummeted to 666. People said this is ridiculous. Let's get some.
I mean, you're going to reach a point where the market is so cheap. It's like, hey, here's a brand new Cadillac and it's on sale for $10,000, and you're like, my God, I got to buy that. Whether I even want it or not.
Right.
So there will be a point. Paul, I don't know. I think it's going to be at least in the 900s on the S&P or the ES in the 900s.
Man.
We've got. Well, look at the Dow. Every time we get to 13,000, we get pushed right back down to 12,000. I just think here's the big thing. Look, this is what I do. I don't pay a lot of attention. Well, I don't pay any attention to analysts, but I don't pay a lot of attention to the numbers that come out of Washington. I look around me, and when I go to the store, I went to the store today, actually, and I bought normal, everyday groceries that I could carry the bags in one hand, and they were almost $50. When I stop and put gas in my car, a half a tank of gas is $50. Well, I mean, that's killing people, and it's not going to get any better. It's not going to get any better. So I just feel like we're just Paul, it doesn't take but just, usually these things unwind in one day. One thing triggers another, and one, sales stop triggers another one, and that triggers another one, and then you got a little panic, and then you got more panic, and then you got just get rid of it, and that's usually how it starts,
Yeah, do you look at the VIX and the volatility indexes and stuff, because you're talking about fear and stuff? And
I've got the VIX right here in front of me right now. It's 26, and it's not that long ago it was 15.
Yeah.
But I remember when the VIX was 60 or 70, maybe even more than that.
Mm-hmm.
I don't really follow the VIX. I mean, I do look at it every single day. It's right here in front of me. But what I look at more than anything is what's really going on around me in the real world. And when I go out to the store or wherever I'm going, I still see cars sitting in people's yard for sale, motorcycles for sale by owner. Across the street from me, there's a house that's been abandoned now going on almost 2 years. And the bank has not even put a for sale sign in it or in the yard. The city came out and mowed the yard. The bank, they could care less. And I've always said, Paul, until you fix the housing market, nothing's going to be fixed. Because that's kind of what makes the world go round is people buying houses, fixing them up. They go to Lowe's, they buy paint and stuff for their house. Well, last numbers I saw was 12 million people's upside down in their mortgage. And a lot of them's going to do what my neighbor across the street did and just walk away. And literally he did. I actually helped him put a piece of furniture on the truck. And he'd found him a nice little house to rent that he could afford. And he just packed up and left. And that's been almost 2 years. And like I said, there's not even a for sale sign in the yard. It's not even on the market. And
then that drives down the price of your house.
And that drives down the price of my house. And it's just, it's a snowball effect.
Yeah, if you were trying to sell yours and your neighbor in the bank was trying to get what they could out of the one across the street, then you're forced to try to compete, against a low price across the street. It all, not to mention it floods the market with a lot of houses for sale. Supply, demand, all that. You were talking about gas just a few minutes ago. I don't mean trader gas, but I mean your gasoline. It has come down a lot, but what gas was $1.98 when Obama was elected. That was the average.
See,
people forget that.
I was talking to somebody just the other day about that, Paul, and they were saying, "Man, gas has come way, way down." And I said, "Now wait a minute." I said, gas just not a few weeks ago was $4 a gallon.
Mm-hmm.
Now that it's $3.50 and $3.30 in some places,
yeah, I got
$3.30. You think it's a bargain?
Yeah.
Well, stop and think a minute. $3.30 a gallon? Holy cow! That's outrageous. But that's been going on, Paul, I know, since you've been driving, since I've been driving. When I started driving, gas was about 39, 40 cents, somewhere in that area. And it would go to 50, then 55, and then 60. And when it got to $1, we thought it was the end of the world. Well, let's say I take a bushel of apples and me and all the apple growers get together and say, okay, we're going to sell a bushel of apples for $20, which is, ridiculous. But people want apples, so they buy them. Well, after a while, we start selling these apples for $17 a bushel. And people's like, oh, thank God. But they're still paying an outrageous price, but it just doesn't feel like it. Well, here's what happens. Every time I fill my car up and spend $60, $75, $80, whatever, that's money that I'm not going to spend at Lowe's, at Kohl's, at Walmart.
And all those other products and services being delivered. Every single product has a price of fuel factored into it. Everything has it in there.
Everything moves on fuel.
And some things are made out of petroleum, like plastics and stuff.
Half of the world's made out of petroleum.
Yep.
Okay, FT, what do you think I might be overlooking as far as the total picture? Because I know you have a little different perspective. Well, maybe not a perspective on the market, but I know you have a different trading style. Oh, okay, he's going to post a chart. All right. You know me, Paul, doom and gloom.
Well, you were dooming and glooming when we were back to 1400s. I know that you were saying this can't last. I remember, you saying stuff, it all looks great now, but look out, and here we go. But it's 10% pullback. This isn't the end of the world yet.
No, not yet.
But I'm just wondering, if a nice nuclear war or something like that wouldn't set us into a bull market. I mean, a bull rally. I mean, I know that sounds crazy, but I mean, I've seen stranger stuff happen. Is what I'm saying. I know it sounds like being an idiot, but and I would hate to see us in a war. But I mean, it just, I don't know. It's crazy. It's just the way
I know.
People don't get it. The average person, they see that the country's, in a lot of debt and all that. They're talking about all the bad news and the unemployment rate's 8% something, and they're bragging because it's down to 8.2, and the economy's turning around and getting better. But then they don't understand how come the market doesn't necessarily follow the economy, does it? And I think that's something we need to explain to people, that just because the economy is strong, and I'm not saying it is, but I'm saying even when the economy does seem to be improving and is strong, it doesn't necessarily mean that market's going up, or at least the stock market,
I remember back in around Christmas, we got all these reports that the retail store sales were way up, and happy days are here again, and spending was up, et cetera, et cetera. Well, it may be true, but right now, those people that were spending money, they're still paying those credit card debts off, and they will be till next Christmas.
Yeah.
I mean, if people didn't have money to spend in October, where did they get it in December? They smoked that plastics where they got it from, And
that's unsecured debt. And
that's unsecured. It's risky debt.
The bank's going to eat it. So
look at Facebook. Holy cow!
Well, no, beautiful thing. Tell me that wasn't capitalism working at its best.
Well,
it smacked that sucker down, didn't we?
I never traded IPOs. Let me look at this chart, because FT does some really good work. FT's a smart guy. Okay.
Yeah.
Bush year dollar devaluation. Bush year market correction. Rally on QE1 and 2 under Obama. So you think we're just going into a normal correction, FT? Or, it looks like we're right on the edge of it, if history repeats itself. Now, we're looking at gas prices. Golly, it don't seem like gas was that cheap, but it was. Well, I don't know if you'd call that a correction or not. That would just be the price of gas. Huh. That's an interesting chart, FT. Very interesting. Very, very interesting. Look at Larry. Come on, guy. Let's get to the fibs.
Good point.
So that's my general consensus. Rock, let me put it this way, buddy. Let me put it this way. I don't have a long-term target on the S&P or the ES. I will say this, and you've heard me say it plenty of times before, all gaps get closed, and there is a gap at 901.50, and that gap will get closed. I don't know when.
It could just happen like one day and then come right back. Another flash crash could take it out.
I mean, don't believe the S&P had dropped quite that hard.
No, but if we had another flash crash, Dave, we'd have to outdo the last one. The Dow dropped 1,000-some points. So
I think Paul, I think we're getting close to those 300- and 500-day Dow swings again.
Well, we just did have some, and unfortunately, they're on the downside so far.
Yeah, I think we're getting close.
There's some big candles there. Show us how you do your fibs during the day.
How I do my fibs. Okay. Here are some real good examples. Now, this is an intraday fib. Everything I do is either a 15-minute chart or a daily chart. And when I say daily, I mean it's a 1 year daily candle. Now, it doesn't necessarily have to be a year. You could probably get away with 6 months, but I just do a year. So this fib here, this is the ES. This fib was drawn at 215. And that gave me a target of 1277.61. I round that down to 1277.5. Okay. The 23.6 level, that's your target. That's where you expect price to go and then pull back. And where you expect it to pull back to is the 50% line. And you can see here it hit the target. It went above it 1.5 points, and that's about where your stop is. We use a 1.5, 2 point stop, what I call breathing room. So you would short here, you fade the target, it pulls back to the 50, you go long. Here it didn't quite pull back to it. But let me show you why I love these things. Now, I do something now, Paul, which I call a day swing. And it's a cross between a day trade and a swing trade. Because I won't hold a contract overnight, I take these daily targets right here. This target 1262.76, you round that up to 1263. Now remember, these are daily candles, okay? So when price comes down and hits 1263, you fade this target by going long. And had you done that today, or actually last night's when it hit, you would, and you use, multiple contracts, and you always, or I always scale out. I take my first profit pretty quick. On a day swing, it's different. I let it run a little more. And once I get my first profit target, my stop goes to break even. And I do not give back profit. Then I'll take a little more, and then I go for that runner. Well, look right here. I mean, it came right to it. Just, only dropped below it just maybe a couple ticks, and this is a daily candle. All right, let's go over here to your Russell. Same thing. 728.2. If I'm not mistaken, this came down to 728.5. You would have got in there. On a day swing, I take my first profit at 30 ticks, which is $300 per contract. Let me see if I can, silver, NASDAQ, cattle, the dollar, okay. If you trade the dollar, you would have went long at 82.54. And if I remember correctly, this moved up, quite a bit during the day today. Let's see. MC, that is this software here. This is Thinkorswim charting. Thinkorswim.
You don't use Thinkorswim for your brokerage, though, do you? You use it for your charts.
No, Infinity is my broker.
Right.
Thinkorswim. I just like their charts. They're free. They're accurate. They freeze up about once a month, and then they're fine. Vintage says how you would work for tomorrow. Okay, what I would do tomorrow based on today's candles, you talking about on the ES, Russell, or just anything? Well, let's just take the ES right here. What I would do tomorrow, Vintage, is I would long 1263 and short 1296.25. Now that's for a day swing, and you have to keep in mind, this is, you can't use little short stops. I mean, you got 96, you got a 5-point range right here, so you're going to have to use about a 7, 8-point stop. And if you get taken out, it's it's going to sting a little bit, but these things are, I say they're deadly as a rattlesnake. They're deadly as a rattlesnake, and you can see the proof right here. My average take on a TF day swing here lately has been 130, 40, 50 ticks. And that's on just, 4 contracts.
Is that all you're trading now? Is that these longer scales like this? You're not, because you used to trade none but the 15-minute chart.
Yeah, I try to do more day swings. Now, here's another thing I do, Paul. Let's say I go in, this is the Russell, let's say I fade this target of 728.2, okay? Well, I'm going to take because it's a scalp. Well, wait a minute, this set up today almost perfect. At one time, there was a target of 728 something right here. I can't remember the details. But the daily target and the intraday target were getting close to the same. And I would have went in and played it as a scalp, which when I play a scalp, I'll take half my positions off at 5 ticks, move my stop to break even. But because I would have gotten in at a daily number, I probably could have, squeezed 100+ ticks out of it. But the ES, I just don't fool with it anymore. It's, golly, it is so manipulated. So manipulated. And I've said, I started with the ES. I know how it used to move, and I know how it moves now. And Paul, I can sit here and watch this ES go up a tick, down a tick, up 2 ticks, down 3, up 1, down 2. And that's nothing but high frequency trading, just churning it. That's all it is.
So you're doing the Russell now.
So I went to the TF, the Russell, didn't know anything about it, put a chart up, studied it for a couple weeks, jumped in, started trading it, love it. I absolutely love it.
So can you explain to us how the pricing works, how to, the profit, and how much each tick is worth and everything with it?
Yeah. In the Russell Mini, which is, the symbol is TF, each tick is $10, and there's 10 ticks in a point. The thing about the Russell that I like is when it moves, it don't play around, it moves. Let's look at this candle here. See that 3.7?
Yep.
That's 37 ticks.
Next one after was good.
$370. Right there. From there to there is $370 per contract. 4.4, that's 44 ticks. That's $440. Rookie, what are you talking about time zones? I don't follow you. I mean, I'm in the Eastern time, but I don't think that's what you're asking.
He asked that earlier, and I'm not sure what he meant by that, rookie trader.
Yeah, what you mean by time zones? Fib time zones? I have no idea, my friend. You have to understand something, rookie trader. Yeah, maybe he meant time frame. Or predict market highs or lows. I draw a fib. I have certain rules, and I don't mind sharing it with you. this fib you see right here, the one that's drawn right now, well, let me go to the ES because it's trading. This fib you see drawn right here, that was drawn at 2:15 this evening, the only thing it would make me draw a new fib and take this one off would be a close on a 15-minute candle beyond the 61.8 line, which I call a trend reversal, or a close beyond the target, which I call target hit and closed. Yeah, Steve, I trade the Russell the same way, just, you know, the stops are different, but percentage-wise, it's about the same thing. Yeah, Rook, I think you're talking about, I've seen people use those fib cycles, I believe they're called, but I know nothing about them, nothing whatsoever. And let me stop right there and say, this fib methodology that I use, don't Google it or go looking in a book or anything, because you won't find it. This is my own creation. It was pieced together over a long period of time, from a little piece from this person, a little piece from that person, a whole lot of testing, a lot of watching. So this is my own little creation here. This is not nothing you'll get out of a textbook. You know, this is something.
Yeah, Fibonacci's, though, go back. You know, I know you know history on it, being a fib doctor yourself. And
yeah.
the Fibonacci mathematical, you know, part in Fibonacci's go all the way back to dropping a basketball on the floor, and it goes up, bounces a certain amount, and the second time it bounces. You know, it's just math. You know,
it's you know, I don't pretend to understand it. If somebody wants to right now, just Google the word Fibonacci, and you'll look at about the first few lines of it, and then you'll close the page. Because if you try to dig into there and understand it, it's so far over my head that I don't care. And I really don't care what makes Fibonacci work. I know I've heard people say it's the golden ratio. It occurs all in nature, which I do know that's true. What makes my little system work, I don't know. And to be honest, I don't care. If it works for me, it works. Now, on that note, y'all know I don't use indicators. But I
use
always,
the fibs as your indicator.
the fib and the dollar is my indicator.
There you go.
But I always say, if you do use indicators, stochastics, Fibonacci, MACD, moving averages, I don't use them. I don't like them. I don't have any use for them. But if you personally can use an indicator such as a moving average and make it work for you, by all means, do it. But I can tell you, I trade this day in and day out and make money, and you can plainly see there's no indicators on my chart. This is my chart I use right here every day. Here's a split screen. This is what I keep up for my members and my students. Here's the Russell. Here's the ES. And during the day, they'll have fibs drawn on them. And if I'm thinking about getting in a trade, the first thing I do is I pull this screen up and I say, okay, let's see what the dollar's doing. And if the dollar's not where I want it to be, I will hold off on the trade. Okay, I'm going to draw you some fibs right here. Here's your target. You see price went up, hit it, went just a little bit above it, came back down. This candle closed below the 61.8, that's the red line. So you just start with your swing high, low of the candle that closed the 61.8. That's called a trend reversal. And when I say trend, I'm talking about the immediate 15-minute trend. Now, look right here. Look at that target, 82.60. Look where price came. Look what price did. Look at that. So this is where you would have went long. You fade the target, and look at that. Now, why that does that, I don't know. I don't know.
Would you say that 50% is always like a good move? Is that like the most common, that everyone is looking at, either with their machines or systems, or either if they're trading organically like you are? Do you think that 50%, on a move like that is just like the first logical, goal that often gets hit?
Well, here's what the market does, Paul. And I don't know why it does it, but I know it does it. The market generally moves in one direction for so long, and then it retraces 50%.
All right.
And then it continues on. That's the broad general explanation. The 61.8 line, for me, I always tell my students and members, think of that as a caution light at a busy intersection, okay? You got in at the 50, you shorted the 50, you're coming up to the 61.8. Let's don't put our stop right at the 61.8. Let's give it just a little breathing room. Let's let it breathe a little bit. Put our stop about right there. Now, why do we put a stop right there? We don't know where this price is going to go, Paul. It may come right to it, take you out to the half a penny, and then go in the other direction.
Right.
Hey, that's the stock market.
Yep.
That's nothing but the stock market reached out and grabbed you. That's all.
Show us this thing working on the 1 minute on the ES. Put it up right now. Let's. I want to see this thing in action, because I bet these fibs will work in multiple time frames.
They'll work on any time frame. I just don't use them.
Yeah, it drive you crazy on the 1 minute, but at least we can watch it.
It would drive me absolutely crazy on a 1 minute. But yeah, we'll let's see.
Now, when it doesn't work out, and it violates those areas and stuff, your fib range, and it's obviously gone against your violated the line at close. The candle is closed and it's not on the fib. Is that your trigger to then redraw? Is that basically how that works?
No, the only thing it makes you redraw, there's only two things, and that is a close beyond the target or the 61.8 line. Now,
right, that's what I mean. Yeah.
Okay. Yeah. Now, I want you to look at something right here. Let me back up. I just threw up a 1 minute chart with no fibs on it. Remember, we're starting over here. There's no fibs. So what I did, I just glanced at the chart and I said, okay, here's a good, see how all this support came in? So that I'm just taking this as a swing low.
Start, yeah.
That's my swing high. Look what these next two candles did. Look where they came down to. The 50% line. Pow.
Yeah.
Pow.
Well, that's naturally where they're going to land. I mean, you got one tick in between there. So, no, I get what you're saying there.
Now we go up here to this candle. Took out the target. Swing low. Took out this target. And now you have to wait till you get a new candle here. Looks like yeah. Okay, so this took that out. See, I'm not even used to even working on a 1 minute chart on it. If I can draw on one.
This is an exercise for you.
It's the same principle regardless. Oh, you got one little. Okay, I didn't even see these one contract things here.
Yeah, those were sideways. There's no volume right now, so
Let's at least go to 3 minutes.
okay.
That'd make it a little. Yeah,
Yep.
that'd make it. Let's see. Let's take this off. Okay, let's find us a swing point. Right here to right there. And then from here to there. Let's see how these targets getting hit. Now, here's your great example, Paul. See your 50% level? Look where price pulled back to. It pulled back 50%, and then it continued on up.
Yeah, now that candle finished flat, but it did, within its 3 minutes, it did hit your target. I mean, your 50%, yep.
Yeah, well, it came down to your 50 and, moved up to your target. But working on a real short time frame, it just doesn't make quite as much sense. Now, when we go back to a 15-minute, let me take this one off. Can't remember which one that is. Let me get all this back in order here. On a 15, what a 15-minute does for me, Paul, it slows everything down.
Yeah, it gives you time.
It puts everything into slow motion.
Right.
There's no big rush. It's kind of like you get a much more clear picture of what the market is doing, where it's going. Okay, I got one more left right here.
And you can potentially get more further moves in your trades.
Well, sure you can.
Yeah,
absolutely. All right, the Russell's going to open right here in about 4 minutes. So let's just have that chart up there waiting.
Oh, beautiful. Opens at 8?
Yeah, 8. I believe it. Yeah, 8 o'clock. Now, this fib here was drawn at 4 o'clock this evening. So this target of 731.50 is still just as valid as it was when it was drawn today. Let me look and see. Let's see. Okay,
Dave, you're not holding any trades overnight, are you?
I don't do that anymore, Paul. I'm getting too old for that crap. I like to sleep at night.
Do you ever find yourself waking up next day wishing that you had?
No, actually, Paul, I'm at a point in my life where I'm very content. A few $100s a day, and I'm done. Now, if I get into a swing trade and it works out real good, and I make 150 plus points, that's great. But I'm done. That's it.
Right.
It's over with. Today, I did 2 scalps. They totaled 35 ticks, which was $350. I was done. That was it. And I'm just at a point in my life. Now, you got to remember, I'm 56 years old. So, yeah, no kidding. I'm at a point in my life where I don't need to make a bunch of money every day. I'm very content with a little profit. And, the old saying, pennies add up to dollars. And I look at my income by the quarter. I don't If you look at your income every day, it'll drive you crazy. Because, you know, a few weeks ago, I had one day where I took 2 big hits. And I was down like $3,200 in one day. But I didn't worry about it because that's just one day. You know, I'm looking at a 3-month time frame for my, you know, my income.
Right.
So let's see. We got less than a minute here. Actually got about 30 seconds. And let's just see where this puppy opens. Oh, this is the gap. I want to go over that because there is so much controversy. And I see guys here all the time posting. I see guys on Stock Twits posting gap close, gap close, gap close. You take 10 people, ask them what the gap is, you'll probably get 10 different answers. Okay? The gap, now, here's where we open. This, between here and here, is a gap. That is a open body gap. That is not the daily gap. The daily gap is 733.4. Where did I get that from? That is the previous trading day's settlement price. That's all it is. That's nothing more, nothing less. The TF, you get it from the ICE site. The ES, you get it from the CME site. Hang on just 1 minute. Hey, I'll call you right back. I'm live on CNN television. The reason you see this on my chart, Paul, the 733.4, that is where the Russell settled. That's the official settlement price from the ICE site.
Oh, okay.
The Intercontinental Exchange. Why that's important, and you'll see it over here on the ES also. That gap has a 98% chance of being hit during regular trading hours. It will be natural support and resistance all through the day.
You said 90%?
98.
98% chance it'll revisit there.
It will, during regular trading hours, 9:30 to 4. There's a 98% chance it will touch this gap.
So
I cannot tell you how many days we've been way away from the gap, and by the end of the day, it'll go up and just.
So the farthest extreme that you can find that that market is away from that gap, you need to load up in the direction of that. Eventually, get to that gap. Close your eyes. And sit back, and eventually you got a 2% chance of you being wrong. If you
that is, Paul, if that is your total strategy.
Yeah.
Some people play the gap, and you have to really hang it out there, buddy. I mean, you know, there's a lot of days it gets close to that gap, and then it turns and it never looks back. And that's why I don't know if I've got any marked right now.
But if it's truly a 98%, I mean...
Yeah, look right here. Now look right here, Paul. Open gap from June the 1st, May the 30th, May the 14th. Sometime or another in the future, price will go back March the 4th. It will go back, touch those gaps, and close them out.
Now, when you say 98%, 98% eventually will hit it, not 98% the same day.
No, it's 98% that day.
98% that day will.
Yep.
So if you were to short this right here, you could say during the day, and that gap's there. You could short this right here, which you wouldn't have a whole lot of profit there, but you could short it right here. The thing could run all the way up, 20 points higher. It's 98% chance to come back, and you're gonna have profit if you put your cover
But
in that gap zone. Is what you're telling me.
can you take that kind of heat?
If
To
it's
me,
98%, I say yeah. I mean, that's good odds, man.
What about if it's one of those days where it never even looks at the gap and it just keeps going?
So you got a 2% chance you get screwed. I mean, that's still good odds,
It's good odds, but it's a stock market. Now, I know a lot of people that play the gap, but they won't play it until it gets within a certain range of it. Okay?
Okay, yeah.
If once this thing moves away so far, it's not it's not likely to come back after it gets so far away.
You're saying that percentage
and
chance changes.
That percentage is going to start to fall off real quick.
Right.
Then.
Especially if it's 5 minutes before the close and it's 20 points away.
Yeah, it's just not going to happen.
Okay.
Right.
All right.
But let's just kind of keep an eye right here. The 50% line, 734.9. Okay, it just got hit. So you would be short at 734.9. Or what I do, and a lot of my members do, is we'll look over here at the dollar. Okay, the dollar is coming down pretty good. So that's telling me that this has got a good chance of still pushing up. So I'm going to hold off on that trade. I'm going to hold off for right now. If it goes up and hits this 61.8, which that's not unusual, and I see it meeting good resistance right there, I may go in short at the 61.8. But I'm watching the dollar in another monitor. Always got my eye on that dollar. Okay, now see what we're doing? Let's see what's going to happen now. This is the tail. Is it going to pull back from there and come down and take out this target? And another thing, Paul, after hours is not nearly, I don't want to use the word accurate. It's just, the volume is so thin. It's not like trading during, regular trading hours naturally.
Yeah, we did just get a little volume spike just now in the ES. I noticed we're up to 1276 half, 1276.75. We did get a little pop there. But yeah, I know what you're saying. It's a lot less volume after hours normally, yeah.
On the ES, this was the target or the fib that was drawn at what time? 2:15 this evening.
Okay.
With a target of 1277.50. All right.
Almost there right now.
We're 2 ticks from there.
Yep.
And let's just put an alert on it so we don't have to constantly watch it. 1277 at or above. ES target. Okay. Well, there it is. Hang on just a minute.
Okay. If you guys are just joining us, I'm RPM, and we're doing a Trader Spotlight live, of course, DayTradingRadio.com. We got the Fib Docker on, also known as NCDave in the Day Trading Radio Premium chat room. And, of course, you can find him in there doing most days, certainly in the mornings, posting his numbers and stuff right in our chat room. And we're sharing his charts and everything and his trading style, his fib techniques and all. I'm just watching a little bit of live market here. You back, Dave?
Okay, Paul.
There you are.
I'm sorry, I'm back.
No problem.
See how 77.5, it went up one more tick, and look what it's doing. Look at that. It's amazing how these things work. Now, the TF, on the other hand, it's shooting right on through its resistance level. But see, something's got to break. You've got a TF with a down target, an ES with an up target, and the dollar's moving down. So, I mean, something, one of them's going to have to give a little bit. And it looks like it's going to be the Russell, which would be a trend change. and we would just simply draw that, and then we'd be back in sync. But this, guys, is how my fib method works. Here's your target. It went to it. It's pulling back away from it. Now, how far will it pull back? I don't know. But this is where you short. Give it some breathing room, 1.5, maybe 2 points.
There's a question from McMill. It says, Dave, if you see a gap in pre-market, you'd take the fade early and weigh the 98% in your favor for the fade to fall at the open? Is that...
No, I don't, McMill, I do not trade the gap. And what I mean by that is that's not one of my trading plans, is to play the gap. What I use the gap for, let's pretend this is regular trading hours, okay? Here's my 50% level at 1270 and a quarter. I'm in a short. I've taken some profit off. I've taken a little more profit off. I've got a runner. When I get to this gap at 1273, I'm going to start trail stopping very tight, because I know the probability of price stopping right there is very high. It's going to be hard for me to get through that gap and get down to the 50. So for that reason, I do not like to get stuck around the gap or the pivot. I want to get away from them as far as I can, because they interfere with my fibs, because they too are support and resistance, the gap and the pivot. The worst thing you can do is get caught in an area right here, because you can sit there for hours and bounce between that gap and that pivot, trying to get to the 50, trying to get to the target. But to answer your question, McMill, I don't per se even have a trading plan. Okay, I'm going short here and my target is the gap. I use the gap knowing where it is, knowing it's going to be support or resistance depending on the direction of the move. I just want to know where it's at. This is the way I explain it in class a lot of time. You may see price go, sideways, up and down, for an hour or two, and you don't know why it's doing that. And if you put the gap on there, you'll say, "Oh, it's riding the gap. That's why it's doing it."
Yeah. There you
go, McMill. It's a point of reference. I want to know where the gap is. I want to know where it is. And just sitting here watching, I mean, look at this. We keep hitting that target and pulling back. Now, granted, we're not pulling back, 10 points or nothing, but this is where this gives you a high probability entry point. And what I mean by that, if you will be patient and wait for this target to get hit, or wait for this 50% level to get hit and either enter here or here, your chances of having a successful winning trade just increase dramatically, rather than taking it off a moving average or whatever it is you use. Let's look at the Russell and see.
Some of your, I could see where you could use the moving averages along with some of this, because sometimes, there's fibs line up with where those moving averages are. I know a lot of people use fibs as a reference, but they also run the other stuff. Whenever you have more than one indicator, I think it adds. But it may also cloud your chart if you're used to only using the fibs. You want it really simple, like the way you do it, I can understand that too.
Yeah, Paul, I like to keep things bare, minimum, simple, and I do mean simple. And as you can see right here, okay, there's your 1 point. It just hit 1276.50. Trading the ES, I would go ahead and take a profit at 1 point on probably half my position and move my stop to break even. So now I've locked in 1 point. My stop is at break even. So I'm in the money now, and I'm not going to give it back by any means. But here's what I really want everybody to stop and think about. And it's kind of fascinating, and I do it every day, and it still fascinates me sometimes. I drew a fib based on my rules. I mean, you got to remember we started way over here. And at 2:15, I drew a fib from, let's see, it started at 1:15, went to the high of 2:15. This target got hit 1, 2, 3 times, and here it is, 2:15. Here it is 6 hours later. Just think about this for a minute. 6 hours after we drew the fib, it's hit that target again and come to a dead stop and pulling back. 6 hours later. That's pretty daggone cool when you think about it, okay? Now, this fib doesn't change. That 15-minute candle closed, it's still within the fib. But I would say the Russell probably did, but look at this, just barely. I mean, it was way up here, but look where it is now. Well, wait a minute, let me make sure. It closed by 10 cents, 1 tick. The 61.8 line, 735.4. This closed at 735.5. Now, a while ago, somebody was asking me about swing points. Here's how I determine swing points.
Okay.
Here's your swing low. This is the high of the candle that made me draw a new field. That's all it is to it. There's your target, 737.2. Here's your entry long, 734.4. Your stop would go here, plus a little breathing room. And that's it. It's really that simple, Paul.
We're building.
And that's what I love about it. That everybody that's with me, that's one of the first things they say on the first day is, "Wow, I love this because it's so simple." And it really is. That's it. I mean, there's nothing else to it other than the dollar. And I do, I trade inverse, or this will run inverse of the dollar. Now the dollar, let me show you what caused that big pop there.
I was going to point out, looks like we're building a little bull flag here on the 1 minute ES chart. We might go higher here. It looks like we are. Market's getting a nice little pop since last 15 minutes or so.
What the dollar did.
There you go. Yeah.
It better pop. All right, let's catch this chart up. This
big old gap in that one.
Then look at this target. See how it came down? Sat right on that target. Moved up. But this time, when it came down, it closed below the target. Okay? Take that one off. Now, what do we do now? We've got a little dilemma here. We've already drawn to the bottom of this candle, and we're going in the same direction. We can't use it again. You just drop down here, draw that one, take that one off, and I want to show you something. Look what happened. Look where that traced back up to the 50% and stopped. I'm telling you guys, these fibs are deadly as a rattlesnake if you draw them correctly and if you understand them. To understand them, I tell all my students, just, there's 3 or 4 basic rules to drawing them. Just draw them and forget it. Don't overthink it. Everybody tries to figure it out, or they try to make sure they're perfect. Don't overthink it. If this closes above the level it's supposed to, you draw the next one and forget it. The fibs they'll take care of themselves.
Was that the alert I just heard? Because it looks like we did go higher. Or was that the plunk noise from the chat room?
Let's see. That was what was that? Oh, no, that's somebody typed in my name. Okay. And it makes it, you go long at the 61. No, Vintage. You fade. Here's the best way to remember it, and I'll even type it in here. Fade the target. Fade the 50. And I didn't spell fade right, but that's because I can't type. And all that means, Vintage, is fade is just a fancy word for doing the opposite. When price goes up to the target, I'm going to fade it by going short because price is moving up. If price comes down to the 50, I'm going to fade it by going long. So fade just means do the opposite. If you went long at 1273 and I went short at 1273, that means I faded you. I did the opposite of what you did. Well, here we are again. 1277.50 is the target. We went to 1277 3/4, and now we're pulling back. Now, I don't know if y'all realize what you're looking at, but, and I can't answer this question. What's making it do that? What's making it go to that target and pull back? I don't know.
A bunch of NCDaves playing the fibs.
Huh?
A bunch of NCDaves playing the fibs.
I don't know.
But they're doing it with the big computers.
See, I'm going to tell you what. Honestly, when I first stumbled onto this, and I worked on this thing for well over a couple years, off and on.
You gave up the moonshine business, didn't you?
Yeah.
Got tired of running from the law.
Yeah. They got these new little Dodge Challengers. Them things are hard to get away from. Somebody said one time they thought I had accidentally stumbled on the Goldman Sachs trading program or something, you know. But I don't know. I don't know what it is, Paul. But I just know it works day in, day out, month after month, fib after fib, target after target. I mean, it just works. Now, let me say this. I have certain times of the day I won't touch the market. I won't touch the open. I know FT does. I've seen him trade open, or he does it all the time, I think. I won't touch the open. That, to me, is 9:30 to 10 o'clock is just off limits. It's just too volatile, and I just won't mess with it. Okay, I thought you did, FT. I won't touch it. I listened to the pit. Now that's something else I wanted to touch on tonight. Okay, yeah, I thought you did. Okay. You know, I've tried to get a lot of people to listen to the pit noise, and people will try, and they'll say, "Gosh Almighty, Dave, I can't. That racket just drives me crazy." Well, when you get used to it, it's very helpful. And the way it helps me, I can just listen to, you know, Ben calling the pit, and I know, is the pit thin? Is it, you know, kind of blah? Or is everybody really excited? Or what's the bid and the ask. I want to, if I'm in, especially in a trade, if that bid ask is going in my favor, I'm going to stay in a little bit longer. FT makes a great point. From 9:30 to 10 o'clock, you will save yourself so much money by just watching, listening to the pit, or just watching price. Don't think about trading. Give it till about 10 o'clock. Let the market settle down. And here's something I want to point out also that I know a lot of you don't do. And you're really doing yourself a disservice. Go to the NASDAQ site or anywhere, Econoday, anywhere, every single morning and look at your economic calendar. Know what time, this number's coming out. Know what time, Chicago manufacturing's coming out, Empire State Manufacturing.
I was going to, sorry, Dave, I didn't mean to interrupt you. I was just going to point out that we have a new calendar thing in the site now, in the forum, and it's a link underneath the members' video that we try to post those times on all that stuff now.
Great. That is the, Paul, I've seen so many people, and it really aggravates me. Let's say a number will come out and it misses tremendously and the market drops 5 or 6 points or 10 points like it did the other day real quick. There's always going to be somebody that says, golly, what happened?
Right.
And that just runs all over me, and I'm thinking, all you had to do was look at the economic calendar and you would know what happened.
Or just listen to Day Trading Radio and we're all sitting on the edge of our chair on the radio when it comes out.
I mean, there's so many, just like you said, Day Trading Radio. Johnny is right on top of all that stuff. He's going to tell you, hey, we got so-and-so coming out here in a few minutes. I see guys posting in the room, so-and-so number out in 3 minutes. There's no reason to get caught with your pants down and say, golly, what happened?
Right.
There's just, I don't do that, guys.
And keep that in mind the night before, especially if you're going to trade in the mornings and stuff, keep it in mind. And
absolutely. Know when options expiration Friday is. Know when rollover day is. This is what you have to do. You have to look at this as a job. And when you go to your job, you have tools, you have equipment, you have certain things you use at work. Well, this is no different. This is no different. This is your job. So when you go to work, be prepared. And let me tell you something else I do that makes the biggest difference in the world to me. I've worked for myself for going on 15 years now. Not always in the stock market, but
like you said, the moonshine business dried up.
Yeah, the moonshine business, and then they come out with them fast police cars, and I can't get away from them. So I thought I'd try this for a while. But every morning, and I mean every morning, I have a very set routine. I'm up 5:30, 6 o'clock, coffee, come in and pull up all my charts. I look at Asia. I look at the Nike 2.25. I look at the FTSE 100. I look at the S&P fair value. I actually put out a newsletter every morning with all that stuff on it. I want to see what's happened, what happened in Asia overnight. What's the Hang Seng doing? What's the Nike doing? And then about 7:30, 8 o'clock, I take a shower and I put on clothes and clean clothes, whatever. I don't wear a tie, not at home, but I dress just like I'm going to work because I am going to work. I take a break every day from 12 to 1:30. And during that time, I go walk a mile. I come back, eat dinner. And then I'm back at the market.
Yeah,
But
I just want to point out, when Dave says dinner, he means lunch.
I mean lunch. Yeah, when I say dinner, that's lunch. But here's what I don't do. I don't get up late and stumble in here at 9 o'clock and say, oh my God, let me get these charts up, and you know,
Yeah.
I hadn't brushed my teeth or combed my hair. No. You treat this just like you were going to a public job, because this is your job. I mean, it's your money. It's your job. And you know, Paul, something I found out along the way why so many people are not successful is they just don't take it serious. They think it's, I don't know, they think they can just enter here and it'll work out, and there was a time you could almost do that in the equity market.
Talk about patience.
Patience. Okay, this is my little spiel that I tell every new student within the first hour of class. This is the stock market. So there's one word that you won't hear me use when I'm talking about the stock market, and that word is guarantee. I won't guarantee you anything other than you're going to lose money here and there.
Yeah.
Okay? But we all know how the market is. All the planets and stars can be lined up perfect. The trade can be perfect. The levels can be perfect, and you get in and bam, it takes you out. So there, you know, I never use the word guarantee. Here's the one exception though. If you do not have patience and discipline, I guarantee you will fail. And when I say fail, you will blow your account, you will lose all your money, and you will have to stop trading. That I guarantee you. Now, what is patience? Patience today, I was in my office at 6 o'clock, and I took my first trade somewhere around 11:30. And then I took another trade a little bit around 2 o'clock. So I was in here all day long, but I waited and I waited and I waited for the right setup. There were some setups, but I didn't like them for this reason or that reason, or I didn't like something I was hearing in the pit, or I didn't like where the dollar was at, so I waited. I didn't say, well, daggone it, I want to get in this trade, I'm just going to give it a shot. No. When you're in the stock market, don't just give it a shot. You got to have everything you possibly can in your favor, and that comes through patience. Paul, I don't know that I can teach patience other than tell you, if you don't have it, and I sincerely mean this, donate your money to charity, because you're going to lose it.
Yeah, I think losing your money,
you will lose it. There's no doubt. I mean, I can promise you that. If you don't have patience, you will lose your money. There's no way around it.
I think losing your money enough times will eventually teach you patience.
Well, that's what taught me patience. I lost $100,000 over, good period of time. And I finally said, you know what? I believe I'm doing something wrong here. And then when I started exercising, you know, a little common sense and a little patience, and I'm like, hey, wait a minute. Things are starting to turn around here. And then when I started, you know, really being disciplined, I'm like, wow, you know, this really does work. So that's what it took for me. All I got to do is think back. Do I want to lose another $100,000? You know? And every time I get ready to pull the trigger, I ask myself, are you sure? Is everything lined up the way you really, really want it? And if it is, bam, I go for it. Now, once you're in a trade, and I use bracket orders, and all a bracket order is it's done automatically when you enter the trade. It's cattle starting to trade a little bit. The pit's not open, but it does some electronic trading. Let's see here.
You want to talk about brackets, and we've had a couple people ask about stops. So, you know, we're gonna be talking about those stops when you tell us about your brackets. I think that's a very important important topic.
Now, when I place an order, I always, and when I say always, I mean 100% of the time, I use a bracket order. A bracket order is nothing more than something you set up on a dome, and you have to go into what's called your scoreboard and set some parameters. It's real simple. You place your exits, and no, it's not. OCO is different, Best. OCO is one cancels another. That's a little bit different from a bracket order. With a bracket order, once you're filled, you have to be filled. Then your exits go in place and your stop goes in place. Okay? And all this is predetermined by the way you set it up. Well, that bracket order takes all the emotion out of it. The only thing you have to do is exercise that discipline and keep your hand off that mouse. If price, let's say we went short here, and our stop sitting right here, and price is starting to move up, and it's getting close to our price. I know, because I've been there and done that, you're very tempted to open that dome up and scoot that stop up a little bit. Just don't do it. Let that stop get hit, take you out, take a small loss, forget it. Now, I know some people, and I'm not opposed to this, will average in. You know, they'll put on a couple here, a couple here, a couple here. If you have that kind of money, I'm not opposed to that.
Hey, Dave.
Okay?
Dave, I'm sorry to interrupt, but my cat hasn't talked to you in a while, and he just wanted to make sure that I told you hello.
Okay, tell him I said meow. And, he'll understand.
If you guys hear that, his automatic feeder, the batteries went dead in it, so I've had to feed the thing manually.
Oh, you've been having to feed him, okay. But what the bracket order does is takes out the emotion. Now, sure, you can reach over and, you know, you can move the stop or you can move the exits. But if you're going to do that, then don't even bother to put it on there. And if you're going to do that, then that goes back to just donate your money to charity because you're going to lose it anyway. But when I put in my bracket order and I get filled, my stop is there, my exits are there. I even have it set up to when my first exit is hit and executed, my stop automatically moves to break even. I don't do it myself. The platform does it. It moves my stop to break even and locks that profit in. And then if it pops back up to break even, I'm out. But I've made 100 or 150 or 200 or however many, contracts I took off. That's the discipline part. And you just have to do it, guys. You just have to do it. So I would suggest to everybody, get with your broker. If you have to, just call them up on the phone and say, hey, can you walk me through how to set up a bracket order where my exits and my stops will be put in, and you'll know where to put them, and don't touch them. Once you're filled, it's a done deal. It's on then. And keep this in mind, guys and girls. The worst thing in the world that can happen is you will get stopped out and take a loss. That's all. And if you have that stop in the correct place, it's going to be a small loss. Okay? It's not going to be a disaster. Now, let me give you an example right here. Because this keeps butting up against this target and stopping. Let's say I've went short right here. Okay? I went short. And all of a sudden, price starts to go against me. And it starts moving up. And I'm like, oh my gosh, this thing is taking off. So I'm going to say, well, you know what? I don't believe it'll go up no more than a couple more points. So I'm going to open my dome up, and I'm going to move the stop up 2 more points. Well, next thing you know, it's right there at that stop, and I'm like, daggone it. Golly, I don't want to get stopped out. I know this thing's going to come down. It'll probably go right to my stop, then it'll pop. I'm going to move it up 2 more points. What are you going to do when you've moved that thing up 10 points and it's still moving up? Now you've got a disaster on your hands. You could have got out down here with a small loss.
Yeah, and you're letting your emotions at that particular time adjust what your original plan was. Up
in here, you're not even thinking. Now you're panicking.
Yep.
You're panicking now. So, and it's kind of odd, Paul. People will not take a small loss, but they will take a big loss in a minute because they just want to get out. And here's the thinking behind it. I'm not going to take a 100, 200, whatever dollar loss here, but when I'm up in the $1,500 range, I can't afford to let it go any further, so I've got to get out.
Yeah.
Well, why didn't you just take it right here and be done with it? If you got out, if it hit your stop and turned and dropped 30 points, so what? You lost a few $100. It's the stock market. I mean, that's what the stock market does. Pop, I've wrote an ebook. You need to read my ebook. It's all there in detail. Throwing up in the trash can and everything. It's all there. Go to my site and read my ebook. It's a quick, easy read. And I guarantee you, Pop, within the first chapter or 2, and it's only like 8 or 9 chapters, real short, you'll say, daggone, that sounds just like me. Or you'll be like, golly, Dave must be looking over my shoulder when he wrote that. So yeah, I got a little ebook, and I do give you some examples where you could take. There's especially one, I think it's chapter 7 or chapter 8, a $50 scalp. It turned into like a $5,000 loss, all because people hate to lose. People don't want to lose. Well, it finally got through to me that if you're going to trade the stock market, you're going to have losses. I mean, it's a net gain. You never heard nobody say daggone vintage? Oh, golly. Yeah, McMill makes a good point. We're all traders, and we all have war stories, and seriously, they're all about the same. The traders I have talked to and traded with over the years, it seems like 100,000 is the common number that everybody says, hey, that's about what I lost, about 100,000 before I turned it around. You know, we've all made the same mistakes. You know, I just don't mind admitting it. I'll admit it in a minute. You know, I've done some really, really, really stupid stuff. I've even got the charts up there of the disaster trade I made in dry ships. Oh boy, did I blow that one. It kept dropping, I kept adding, it kept dropping, I kept adding. You know, the classic dry ship trade, I think everybody got caught on that one.
I got burned on that too.
Well, dry ships went from a few dollars to 130. And nobody ever thought dry ships could come down. And I think it came down to $2. Mm-hmm. But never, ever, ever again do I average in a trade. I take a stop, the trade's over with, I'm done, I wait for the next setup. I have a self-imposed rule. If I take 2 full stops in one day, I'm done. That's it. Done.
So if you get stopped out twice, now, do you count that? Do you count, like, let's say you've taken some off, and you move your stop to break even or something like that or whatever? That doesn't count, right? You mean if the trade just went against you and you lost money? Gotcha.
Yeah, that's a winning trade because you've banked profit.
Right.
But if I get in a trade and it goes against me and I take a full, complete stop, that's one. If I do it again, I'm done for that day.
Wow.
My thinking is your focus is off by then. You know, it's kind of like Michael Jordan, you know, at the free throw line, and he shot 5 free throws and he missed them all. Well, his focus is got to be off. You know, that's shaking his concentration.
Or I guess in your case, you could look at it like your particular system just ain't working that day. You know, sorry about that.
Well, that's another way, Paul, to look at it. You know, I got up this morning. Here's a textbook example. I got up this morning, came in here about 6 o'clock, turned my computer on, didn't have an internet connection. And I'm like, oh, crap. You know, because I teach every day, and I'm like, and I actually had 2 new students today, and I'm like, oh, this is great. I don't have no internet this morning. Well, it turned out I just needed to reset my modem, and everything was fine. But I know everybody's had those mornings when you get up and this is wrong. You look outside, you got a flat tire on your car. You go to do something, you drop your coffee cup and you break it. You turn the coffee maker on, you forget to put the cup under, coffee's all over the kitchen counter. You will have days when it's just not your day. It is just not your day. You know, we all have them. It's just not our day. Like race car drivers. Some days they can't do nothing wrong. Some days they can't do nothing right. So I figure if I'm stopped out twice one day, hey, this probably just ain't my day. It just ain't hitting it today. So I quit. And you know, I'll quit with, you know, I'll have a few $100 loss. For the next guy, he may get mad and say, "Daggone it,
Revenge trading.
Yeah, I've got to win," and I hate to hear people say win money back. I've got to get back. I got to get at least half of it back, or this much back, or that. That's the worst thing you can ever do. Revenge trade will kill you in a minute. Vestor 3 times. I just don't go 3 times. I keep it at 2, and just say the heck with it. I stop at 2 stops. 2 full stops.
Would you say most days one stop will hit on you? Do you often have profitable days and one stop will hit on you maybe in the morning and a little bit in the afternoon or something, whatever, after you've had a profitable day, maybe the second stop hits and you finish the day positive, but you still had them 2?
Yeah, not usually, Paul. I have found a technique that works very well for me. And here lately, I've not taken too many stops. But you got to remember, like today, I was up $350. I quit. I stopped. Not many people will do that. Most people that I'm accustomed to trading with and being with, they're just getting started at 250 or 350. Me, I'm done.
Yeah.
Let me see what Ann just asked me something on Twitter. 2 4 stops. Ann, that's 2 full, F-U-L-L, 2 full stops. And when I say a full stop, I mean if I let it go all the way to my stop completely and take out, you know, my whole position.
And that's not 2 consecutive ones, right? That's just one and then another one follows.
Yeah, they
later.
don't have to be consecutive.
Right.
They can be, you know, 1 in the morning, 1 in the evening, and I'm like, okay, I'm done.
And you might be in profit by the end of the day, even after the second stop, but you don't push it.
Yeah, absolutely.
You don't push it after that because it's either taking your money either way. Yeah.
Right.
Gotcha.
Right. Absolutely. Let's see, what's Ann saying? If you're on a day job, listen well. Oh, she's shopping. Imagine that. Can't imagine Ann shopping. Oh, if y'all know Ann, well, I guess y'all know who Ann is. I know Kaneko knows who Ann is. Is Kaneko here? Kaneko, is he here? What kind of name is that anyway?
It's Kaneko is what it is.
Kaneko.
Yeah.
I don't see him in the room, but he's talking to me somehow. He must be, listen, him and Ann's out shopping, so he must be listening.
Ann, his wife.
Yeah, his wife.
Yeah.
Yeah.
Miss Kaneko. Yeah.
His cane. His dog, what's the D-O-R? Oh, his dog. Oh, okay, the dog, okay.
Dog is D-A-W-G.
Yeah, that's D-A-W-G, yeah. Gas, how you doing? You killed anybody lately? See, Ann just says we are listening. So they're listening somewhere, somehow.
They're probably riding cows on the farm.
Yeah.
On the ranch.
Let me check. So before we wind it up here, it's almost 9. Here's the dollar. See how it came down to the 61.8 line, and see how it just stopped dead right there.
Yep.
This is market breadth. It won't move until the market opens. And market breadth, and that's spelled B-R-E-A-D-T-H, breadth, as in width, breadth, width. That is the NYSE advancers versus decliners. This is the 0 line. The only reason I use it, I want to know is the market generally strong or weak. So I'll glance at that a couple times during the day. This right here is a great chart. And the reason is I can look at a glance at the Russell, the ES, the NASDAQ, the euro, the dollar, and gold, all just at a glance, I can tell you what everything's doing.
I like that.
Well, you may say, well, why is that important? If I see right here, the Russell's red, okay? I see the Russell coming down real hard. I see the ES coming down real hard. I see the NASDAQ coming down real hard. The first thing I'm going to do is look right here, and we got a problem. The dollar is also coming down. That's not, something's not right. So I'm not getting in a trade. I want to make sure things are doing what they're supposed to do. And when this is almost what I call a waterfall. A waterfall basically is just where a market rolls over and just goes straight down. And when you hear me use the word vertical, it's the opposite. It just goes straight up. This is vertical. Right here's a vertical pattern. That was last Friday on non-farm payroll, and gold just blasted off. Waterfall, well, just turn that upside down. That's waterfall. But because we have our three major indices basically in a waterfall pattern, the dollar should be vertical, and the dollar is in tandem somewhat with the major indices. That's wrong. And when I say wrong, the market's never wrong, but it's wrong for me to get in a trade because the dollar should be inverse to the index futures, and that's the very first thing I look for. And if that's not doing that, then I'm like, okay, I'm going to set this one out. Same with the indicator. Yeah, okay.
Any more questions? I see you reading some there too.
Yeah, do I cancel a trade when I fade to 23.6, but your target is stop is not hit, but the next candle closes above it and you need... No, if I'm in a trade, if I'm in it and I get a trend change or a new draw, here's what I do. And it actually works pretty good most of the time. Let me find a shorter draw. Okay, let's say, for instance, price comes down to 734.3 and I go long. And on the next candle, it drops below the 61.8, so I'm going to have to reverse this fib to the downside. But I'm still in the trade. I haven't been stopped out yet. The first thing I do is I look and say, where is my 50% line? Because there's a very high probability that price is going to retrace to the 50% line, and that will let me get out at either break even or maybe a few ticks profit. But at that point, do not get greedy. All you're wanting to do now is get out of the trade at break even, or a tick or two loss, or maybe a tick or two profit, but don't push it because the trend has turned on you, and the fibs were tight enough that it didn't take you out. So now take the opportunity to get out at break even. Don't look for a lot of profit now. Now the scenario's changed. Now you're looking to get out of the trade without a loss at all if you can. So that's what you do, Leo, if it turns on you.
Dave, do you try to just stick to your brackets that are in there, or do you?
I do stick to
them. So you never alter a trade? I mean, unless maybe some kind of emergency or something happens at the house or something like that, or I mean, do you ever just get out, or do you always just leave that bracket that's on there? Do you always let it play out no matter what?
The only way I will alter an exit or a trade, now I never move my stop away but I will move my stop tighter. In
Right.
other words, if I see something, I'm like, hey, this is just falling apart, I'll go ahead and move my stop, closer and take a smaller loss. On my exits, and I have found if you will be patient, sometimes it's hard to do, but if you'll just be patient, majority of the time you get your full profit. But let's say I got in right here at 37.2, and I'm trying to get 10 ticks on my second set of contracts, and it's just hitting 9, 9, 9, 9, 9, and it just will not come down and give me that last tick. Don't blow it over one tick. Go ahead and push it up and take it off at 9 ticks instead of 10. But I mean, I'll give it plenty of time to work out, plenty of time. But you've got to find that balance, and you've just got to know when it's time to do something. You can't just sit there and look at the screen and say, oh my God, I hope. Don't be smoking hopium when you're trading the stock market. Now, I particularly was kind of keeping an eye on this. For an hour, what have we done right here, guys? Look at that. Mm-hmm. Is that amazing or what? Now, I know some people are not that crazy about fibs. Some people don't believe in fibs. That's fine. But you tell me. 6 hours after the fact, and for an hour, we've tried to push through a target, and it just ain't going to let it get through there. So, in theory, you could have sat here and scalped this thing to death over the last hour. Would it be worth it? To me, on the ES, no. Because the ES just doesn't move like it used to. On the Russell, yes. But the Russell, as you can see, is not doing what the ES is doing. Silver. Okay, look at silver. Silver's up a little bit over 1%. NASDAQ's not doing much anything. Gold is up 0.5%. Cattle, overnight you'll have 1-2 contracts trade here and there on cattle. Look at that dollar. Let me take the big fib off so you can see it better. See, this is the shorter term draw. Yesterday it held the 50, gap down to the 61.8, bounced right off of it. And in closing, I want to show you guys something that you'll see me post every now and then. I'll say open body gap at so-and-so. Mm-hmm. And people are always asking, what do you mean, Dave, by an open body gap? Let me find a good example. All right, here we go. This candle closed right there. This candle open right here. Now, what do we have between this candle body and that candle body? And remember, it's called a body gap. So discount the wick. In your mind, you just have to say that wick is not there. So between this body and that body, what do we have, guys? From here to here, what is that?
We do have that wick that's there, right? The wick that's covered in what you're saying. Ignore the wick.
Ignore the wick, because we're calling this an open, OBG, open body gap. Come on, somebody, I mean, what is it? What's between these two bodies? There's a gap. There you go, Mac. There's a gap.
Oh, I thought you're pointing lower.
No.
Yeah,
so,
you're talking about from there to the, yeah.
Yeah, from this close to that. See, this candle closed here. Then the next candle opened there. Well, discounting the wicks because they're called body gaps. Here's the body, here's the body. There's a gap in between. At some point in time, this will get closed. Price will move up. It may be tonight, it may be next week. Price will move up, and a body of another candle will close at least at 1350 to close up that gap. There are no open gaps.
The
market does,
while we're on it, can you explain, I didn't mean to interrupt, but can you explain because people ask us this all the time, can you explain the candle itself and what the actual price, what the wicks, you know, at the top and the bottom, and what the body means? What does it actually mean?
Okay. I'm glad you brought that up. That's a good thing. Everybody should know how to read candles, because if you don't know how to read a candle, you're really missing a big part of the picture here. Okay. Let's go to an intraday chart. Okay. Let's look at a real live situation. Here's what's going on. And let me zoom in and make it good, bigger, where we can see everything real good. Okay. The fat part's called the body, and the skinny part's called the wick. That's the only two things that make up a candle. If you stop and think about it, a candle is no more than people. It's buyers and sellers. That's all it is. That's what makes a market. Somebody offers, somebody bids. You know, somebody's offering 76.5, somebody's bidding 76.25 or 76. And sooner or later, one side will give a little bit, and they'll come to an agreement, and they'll make a transaction. Well, right here, it's pretty obvious. There was a lot more buyers than there were sellers. All this was buying. Had a little selling, not much. But here's what happened. Here's where this candle, let's see, this candle opened. This is the open. This is the high. This is the low. This is the close. Well, what this tells me is this candle opened here. And it only dropped just very little. And then from there, it was all buying. Now, as the candle closed, there was a little selling, but it closed way up here. I don't know, Airman. I don't do Hikanashi candles. I know a lot of people use them, but I don't know. And I'll tell you why I don't know. When I find something that works, Airman, I stop. I don't look for anything else. I've tried everything. I've tried market profile, volume profile, some of the stuff FT does, where I forget exactly how he words it, but it's where you look for the inventory level, setting up here and setting down there, and you group all these little things together, and I just can't do it. So this works for me, and I can't tell you what a Hikanashi candle does that these don't do. Okay? Hey, I'll be honest with you. If I don't have the answer, I'll just say I don't know. But back to what I was talking about, as price hit the target, this is where the sellers came in and said, basically, we like it at 12.75 1/4. We'll buy some. We like it all the way up here to 12.77, but after that, we don't want no more. You know, it got up here, and people like, nah, this is more than I'm willing to pay. And you know, if it was during the day, you would hear Ben say, you know, 50 bid, 80 offer, 50 bid, 80 offer, 50 bid, 60 offer. Nobody would take the 60 or 80 offer, and it would start to drop back down. The market is nothing but an auction. You know, I've heard so many people say, daggone, I try to listen to that guy being, it sounds like a damn cattle auction. Well, that's what it is.
Yeah.
It's an auction.
It's just
you know,
like
people's
cattle.
bidding and offering. That's what the market is. It's an auction. So when I look here, I say, okay, target, push back. Go to my next candle. Target, push back. Target, push back. Now we're getting a little more selling. Why? Because we closed at the lows. When you see a candle that does not have a wick on the end of it like this one does, that means that it was pretty strong whichever way it's going. Now this is a little short candle, but by the time this candle finished, they started selling up here and they were able to push it all the way back to the low. That's why there's no wick poking out there. And while we're on the subject of wicks, I'm going to show you why you don't trade the open. Here's a 9:30 candle this morning. Okay? Look at those wicks. Look at this wick. Anytime you see long wicks, that is extreme volatility, and to me, that says, leave me alone. Because you were way down here, and now you're way up here. Same here. I mean, look at this. That's what I call an inverted hammer. That's a sign of downward selling pressure, and you can see, boy, they followed through. There's 4.5, 5.5, 4 3/4. What's that? 9, 13, about 15 points from here to here. But here was your tip off.
Yeah.
This was your tail right here. That right there. I mean, they slammed that thing down. And then look at this. Just wham. Then it got down here and it was on what I call, it was on sale. People said, I believe I'll take some now that it's down here at 69.50. So always remember, this is why I don't trade the open. If I was going to trade the open, I would fade the locals, because the locals get it wrong every morning.
That's what Johnny always points that out too. We notice that every morning.
They get it. I'm going to tell you what, I've heard them guys take more heat. I've seen them stay in a trade till dinner time.
Yeah.
So that's it, guys. Anybody got any final questions?
Good stuff, man.
I'll probably give you just enough to confuse you. I do have a website, thefibdoctor.com. It is loaded with charts. Anytime there's a daily change on the chart, I put it on the website. It's explained in detail. There's a little ebook on there you can read in probably an hour. It's just a real quick little read. A lot of information on there. I do have a mailing list if you want to get on it, where I send out every morning the gap for the ES, the TF, and I do send the first Fibonacci drawing of that morning.
You also post that in the chat room too, I want to point out. A lot of times you post a lot of your numbers and everything in the chat room nice and early in the morning.
I posted in the futures chat room too.
Right.
Yeah, see, like Pop says, you know, I send him that morning news, and then he can look back through it all day, because it's got a little bit of everything on there, and it's straight and to the point. There's no garbage and, you know, a bunch of superfluous stuff on there. But if you're not sure about drawing fibs, what's up, Michael? It will give you the first draw of the day and you can start there, and then you can go through the day and draw your own fibs, but at least you know, hey, this is the right place to start because Dave has given me the right fib. Now, by the time I type it up and send it out and the time you get it, that fib may have completely changed, but it gives you, you know, the starting point for the day.
Yep.
Oh, and one thing people ask me all the time, how do you start a new fib in the morning? You don't. You just continue drawing. This fib, like, I'm not going to take this fib drawing off tonight and then in the morning start a new one. This thing just, this chart right here, I've been drawing this on this same chart for 3 years. I just keep drawing the fib. Just keep drawing the fib. So when you start in the morning, all you do is come in here. Let's say we come in here in the morning and then we're way down here. I just start drawing and drawing and drawing until I get, you know, current. Just get right up to, you know, the current draw. So you don't take a fib off at night and start over in the morning. A lot of people ask me that. Hey, I appreciate each and every one of you being here. I was going to tell you, Paul, this year I have hit the jackpot on some blues concerts. I've been going to Durham and Greensboro. Man, I have seen some major blues artists this year.
Really?
Now, check this out. You guys that are about my age, everybody knows who Meatloaf is, right? I mean, Bad Out of Hell, 2 out of 3 ain't bad.
Yep.
I mean, who don't know that?
Doing acting and stuff too. Yep.
Yeah, yeah. I've got a ticket to see him in August in Durham at the Durham Performing Arts Center, right up front. And I have an original 1977 Bad Out of Hell album in the jacket, the original jacket, looks like brand new. And I'm going to do everything I can to get him to sign that thing for me. So really looking forward to that. But yeah, this year I've rocked out this year on some blues. I've seen, holy cow, Buddy Guy, B.B. King, Joe Bonamassa, Johnny Lang. I mean,
where are they all coming to? They're coming to where?
I go to Greensboro and Durham. Yeah, I go to Durham. Now, I don't go to the Coliseum.
Yeah, these like small clubs and stuff, or
no, the theaters, the old type theaters. This year I saw the Jimi Hendrix tribute tour. I got Billy Cox's autograph. Got to talk to him for a few minutes. Billy Cox was Jimi Hendrix's original bass player, one of his original band members.
Oh, wow.
Oh, yeah, got his autograph right here. Well, actually, I've got a Facebook page that's got all the autographs and I made tons of pictures, and yeah, I've hit it good this year.
Is this something that you just started getting back into just recently in the last year or so? Going to see these bands? Going to see these?
Well, yeah, it's kind of like a bucket list thing. I'm like, hey, you know, these guys are getting old. And B.B. King's 87 years old.
I can't believe he can even play. I mean, that's amazing.
I'm going to tell you what. I stood 20 feet from him and watched, never took my eyes off of him. He looks like he might be 50.
Crazy. Like
Tommy, he actually sets down the whole set now. He doesn't stand up at all now.
Yeah, he's sitting.
But boy, he can still rip that damn guitar apart, boy. Matter of fact, let me, real quick before I forget.
And next time you got something good that's coming into town, give me a call, man. You're about 3.5 hours from me. Greensboro about 3 hours, 3.5.
Okay.
What was it, about an hour and a half from you?
to Durham, just about an hour. Greensboro's just down the street.
Yeah.
I'm going to give y'all my Facebook page. Now, there's a lot of photos on here that I put on recently, but if you'll scroll on down, go on down towards the bottom, you'll see tons of photos. I got some great pictures I shot at that Jimi Hendrix tour. Got Billy Cox's autograph there. Quinn Sullivan. Everybody know who Quinn Sullivan is? 14 years old. Tours with Buddy Guy. Unbelievable. Kenny Wayne Shepherd. Unbelievable. Johnny Lang. I mean, these guys, you know, they're the best of the best. But I can't wait to see Meatloaf in August. And if I can get him to autograph that 1977 album cover, that'll be something to have. So y'all check it out. Paul, I really appreciate you having me on.
No, man, the other way around, man. We appreciate you coming on, man. Great stuff. Love listening to you. Miss you because you've been doing your own thing kind of for a while.
Yeah,
I know you had that health scare back a while. How you been feeling lately?
Oh man, I'm in great shape. I had that heart attack 5 years ago. I don't even think about it. I've lost a lot of weight. I walk every day. I quit smoking. I'm probably in better shape now than I was when I was, 30 years old.
Yeah, you've been steadily losing weight too. I know.
Oh yeah, losing weight, walk every day, eat extremely healthy.
Yep. Sell hot dogs, but you ain't eating them yourself, right?
I sell the hot dogs, but I don't eat them.
Yeah. And you've been watching out for them trees, right?
I tell you what.
Talking about a stop.
Tree, don't mess with me, man. I mess the tree up. Man, it's good to hang out with you, Paul.
You too, man.
Now, for you other guys, I do post in the futures room about every morning. I post, a few charts and stuff in there. I don't post in the main room because I'm just so busy, but I do open the futures room and post in there. Straight shooter, I've not fished one time this year. Salem Lake is going to be closed till, they said, probably September. They built a new dam, and they had to close it for about a year and a half. Zapper's doing good. He's laying up here. He's just laying over here, being a bulldog.
There's pictures of him on your Facebook page.
Oh, I've plenty of. I got more pictures of Zapper than I do anything. But yeah, if you'll scroll down there, you'll see. I got a drumstick. Got it laying right here on my desk, autographed by Tim Austin. That's Buddy Guy's drummer. He gave me one of the drumsticks after the show. It beat all to pieces. I didn't realize it. They go through these things. Well, they beat these drumsticks all to pieces. Got that drumstick from him. Bunch of autographs. I did get Johnny Lang's playlist off the stage. When they do tours, or shows rather, they have their song sets that they're going to play in what order, and they tape them on the stage floor in front of them.
Yep.
And I got Johnny Lang gave me his playlist off the floor. I got it. All that's posted on my Facebook site. But just go to the, just look through the albums, and you'll see. I got all kinds of photos, some really, really good photos.
Yeah, I'm looking through them now, showing people.
So.
Good stuff, man. Thanks, Dave. I just sent a friend request to you. I see most of your profiles open anyways, but.
Yeah, there you go. That's the Jimi Hendrix tribute tour there. Actually, history was made that night right there with the people that was on stage. Chris Layton, the drummer for Stevie Ray Vaughan, Double Trouble, he was there. can't never remember this guy's name. One of the lead guitar players for Aerosmith.
Steven Tyler. No, I mean not Steven Tyler. Oh, no, that's the singer.
I can't. He's on there. I can't remember his name. It was just.
I'm completely forgetting. Joe Perry. That's one of them.
I think this was one of the originals from way back when.
Oh, okay.
Golly, Los Lobos original members were there. What's that guy, Robert something, that plays a steel blues guitar? He's crazy. What's that guy's name? Robert something. Anyway, you had to be there. History was made that night. History was made. So look here, it took 1 hour and 15 minutes just to get through the target. And you got 6 minutes left on this candle. Who knows where it'll close?
Yeah, I was looking at like a bull flag there, and it went higher.
Let's see what the Nike's doing. The Nike 225 is it's up 0.7%. Okay, Ann, we'll fix that. I'd send me a request. Send me a request. I got to go.
See you, Dave.
I appreciate you having me. Y'all have a good night. I'm out of here.
Have a good one, man. Thanks a lot.
Thank you.
All right, y'all. So that was the NC Dave. Same NC Dave as always. Just a good old guy. Down to earth. Good trader. Good day trading radio member. And it's been a while since we've had him on. It's probably been 6 months or so. I try to have him on, he's probably been on 5 or 6 times or whatever. It's good to have him back. It's just great to listen to him. A lot of, experience and knowledge and wisdom, He's got a really simple system, and, definitely consider, trying it out, see how it works for you. We did record this, of course, and, for you guys to watch. I'll post this into the YouTube, and I'll put it on the forum, on the Day Trading Radio forum, as a Trader Spotlight forum, and I'll post it in there for everybody. If you caught some of it, of course, we did start today a lot earlier. We started at 7 and about 2.5 hours tonight. So it's a great show, but for those that are just checking in, expecting something that just started at 9 or so, you missed majority of it, but you'll be able to catch the rerun. For those out there that aren't Day Trading Radio Premium members yet, definitely please consider it. We need your support. It's a bargain, $1 a day. That a lot of this information, everything completely free. You can listen and all, but you really, to get the full benefit and to really understand the full value, you need to go ahead and join. Take the 2-week free trial. Lots of good stuff that we're adding to Day Trading Radio. Of course, the HPS, high probability setups site, which is going to be basically merged in, that the members are going to get. And members have now. You can find the HPS link down there underneath the Super Stock Jockey at this point on the members page, in the bottom right hand, not the bottom side, but on the right hand side. Definitely check out the HPS, and that's going to get better and better. In fact, I'm making changes to it today. I was making changes to it last night, yesterday. Johnny's got some great ideas that we're going to incorporate into that. As well, and we're constantly coming up with new ideas and all. The charting is going to get better in there. The alert system definitely is going to get better. Now we have the futures room that Dave mentioned a couple of times. The futures chat room for any of the people that maybe let their membership expire or would like to come back. That's something we've added in the last 5-6 months, I guess, that maybe some people have missed or don't realize or don't understand it's even there. For those members that they're still here, may not even realize that that's there. We've got the Day Trading Radio's Trader Zone, which is a forum, a really nice forum that's getting started, and the roots are planted and it's starting to grow. Lots of good information. We have, at any one given time, 10 or 15 people in there just browsing around, looking at links and stuff, and getting information, watching the shows, looking at the other members' charts and stuff that are posted there. So a lot of contribution going on in there, which is great. We got the blog, there's a little blog section, so each member has their own little blog that they can post things. And then we have a new, like we were talking about, new calendar and stuff like that that's been added, and it's great for the events and everything coming up, where you can see what's going on, and all kinds of prizes and giveaways and stuff that we're constantly doing. Some of those have been going on forever, but we're coming up with new stuff like the Super Stock Jockey prizes, and the Super Stock Jockey trading game. So on Facebook there. So lots of things, lots of argument on the side of, it's time to become a member, and you never know when the price might go up. Thing about the existing members, you're locked in. So if you get in at the ground floor, the way things are, if the price ever were to go up on you, or go up for new members, you're locked in. You get all those features and benefits, of the premium membership as it gets better, and more features get added and more cool things get added to Day Trading Radio. You're locked in at that price. So if you're sitting on the fence, now would be a great time to go ahead and hop on in with us and say hello in the chat room. And I'm sure you will make friends. You'll be welcomed, and definitely start enjoying those benefits and that value that we always talk about. So with that, everybody, I'm gonna go ahead and call it a night. It's early finish for me tonight, but of course we took Dave on his time frame today. We still gave you a good 2.5 hours. I enjoyed it. Dave, once again, thank you so much for your wisdom and your expertise and your market knowledge, and visiting us again. We miss you. I'd like to have you back again, of course. Good to see you in the chat room. Thanks for posting in there every morning like you do in the futures room. We appreciate it. And for anybody that would like to be a guest on the Spotlight, just let me know, or let Johnny know, or let me know, let Brian know. Get with us, and we'll definitely take you up on that. We'd love to have you. So with that, I'm RPM for another Trader Spotlight Live. This has been Monday, June 4th, of course, 2012, and it's right here at about 9:30 p.m. Eastern. The futures are running up a little bit here. We're at 1278. Of course, if you're watching an archive show, you might look back and laugh at 1278. I don't know if you're watching it later on, but this is a point in time here at June 4th. This Monday, 2012. So with that, everybody, I'm RPM for Day Trading Radio's Trader Spotlight Live. Take care. See you in the markets.